Hey, good morning, everyone. Marty Missouri here. It's Tuesday, the 20th of February, 2024. This will be my midweek market snapshot. Clients will get it attached to an email as Wednesday morning's message. Got to keep it relatively quick. The patterns are virtually the same, although we are breaking down in the NASDAQ 100. Remember, at the end of last week's video, I think I characterized the charts for the major averages as a mess, meaning that they look heavy to me. Downside probabilities are too high for comfort right here. So we'll touch on the usual, the S&P, the NASDAQ 100, the Russell, and then I want to dig into NVDA a little bit today, since tomorrow after the market they're going to announce their earnings, and that has been an absolutely massive driver of the major averages, the NASDAQ, of course, in particular because of the concentration. Of course, everybody's talking about it. Chart looks very interesting, to put it mildly. So starting with the S&P 500, folks, here's our uptrend line, our short-term uptrend, very well defined. Lots of points where we're hitting it. Looking to break down below that. We have a sell signal on the MACD. Bearish divergences galore in our momentum indicators. Remember, short-term traders, you're looking for a break of that trend line to go short or to get out of your longs, so to speak. But you do have it here. Some people will trade the MACD sell signal as well. You already got it on the NASDAQ 100. You can see we broke down below this trend line. Even if you want to be generous, you could put it here. And not getting saved so far this morning by the 20-day moving average. Again, concerning, very concerning bearish divergences on the momentum indicators. NVDA, interestingly, and again, I'm going to show you that, is down a bunch this morning, even before the earnings, but I'll get to that chart here in a second. Russell 2000, small caps rolling over pretty hard this morning as well. They are down 1.18%. You can see the candle here. It was Friday, and then this gap down. So looking right on this very key support level of right around 2000 on the Russell 2000. We shall see. As you know, our fundamental case is that stocks are not positioned well just yet because the macro isn't positioned well in our view, and it's not necessarily the majority view. I've been listening to a lot of commentary, lots of complacency. And I think a couple of firms up their S&P end of year target. And, you know, frankly, I think the S&P could be higher by the end of the year. It's between here and the end of the year that I think investors need to be very, very guarded about. So anyway, moving on. So NVIDIA, I was actually working on this chart at the end of last week. And, you know, NVIDIA is actually a great example. When I say these patterns can fail, how they've failed on NVIDIA stock that's just got a narrative and just a lot of FOMO, fear of missing out behind it and so forth. So back in the fall of 2021, you can see that we had a new high, but we had bearish divergences. And you can see that that played out pretty nicely. The stock went from over $300 a share all the way down to $200 a share. But then you can see we had this descending triangle pattern against bullish divergences, right? So then you popped from 200 almost back to 300. These are pretty big percentages, aren't they? And then you had a sell signal on the MACD. You had the RSI rolling over just ahead of price. And then you had a very well-defined, I think, bear flag pattern that played out right virtually to the target, just maybe a little bit above it. And then, you know, here you are. It looks like I wasn't working on it here, but these were beginning to look like bullish divergences. Got a little bit of pop, quickly rolled over. Then here, definitely one there as well. You had a rising wedge here on this chart. And now you're below the 200. Now that's resistance. So I will say that up until, you know, we got into 2023, the technicals were working just fine, right? You had a lower trend here. You had bullish divergences. You got a really nice pop, almost down to 100, almost back up to 200. But then you began to lose steam in classic fashion, right? And you can see why we respect these charts so much. Okay, so here we go down. Now we had this big ramp up, broke through that 200, zone there, had bearish divergences, very notable. All we did was come back and retest and then gapped higher. And there's a gap that is yet to be filled, by the way. And then ramped up. Again, momentum began to sour. Again, AI news came up, big pop here. First quarter earnings announcement, looks like timing-wise, I'm sure that's that. And then we moved up and settled into here. And during this whole consolidation phase, you had these long bearish divergences. And again, the way we look at things, you'd be very bearish. You say, wow, this really looks like it's going to break out below. Well, clearly that's not what happened. And when I say you could burn through these divergences, may not be likely, well, it actually happened. And you just screamed, broke out of that consolidation with momentum, very impulsive. And then you got this, just this moonshot, right? And this was the trend line that I had drawn on there. This is this morning, and NVDA is down 5 or 6%. Again, earnings aren't till tomorrow, so this is looking pretty messy technically. You just got your sell signal on the MACD, and you're just coming off of massively overbought levels. Last time we were overbought like this was back when it went from 300 to 200. So the technical picture looks pretty precarious. Take a look at the 60-minute chart. Again, I was looking at this on Friday, and you can see we had this long uptrend from the January low, massive, and the short-term stuff, but really massive bearish divergences here. Again, this just looked really, really bad. Now, tomorrow evening, they could knock it out of the park again, particularly if we can sell off for today and maybe even tomorrow. And then you may get something pretty big to the upside there once again. But I will say, folks, this stock is at a pretty ridiculous altitude right here. So even if we did get a big pop and maybe started pushing on 800, I don't know how aggressive I would be with this one right here. I mean, that could happen. Right now, the technicals look pretty ominous, and there is nothing but air down to, say from where it is now at $685. And you're going to get, believe me, there's no doubt about it, you're going to get some saves at some of these levels. But indeed, if we don't get a perfect report, or if other factors come in, like inflation continues to show some heat that has got the market very worried because it was discounting a bunch of Fed rate cuts this year, well, that bodes quite poorly for the tech sector, and I don't think NVIDIA would be immune to those kinds of dynamics. And then you break down below here, this could happen. In fact, it wouldn't surprise me, quite frankly. Got a big fat gap to fill back over here. And again, if our overall macro concerns ultimately come to fruition, these kinds of levels, and or even lower, frankly, are well within the realm of possibilities. It seems kind of far-fetched. Certainly anybody who hasn't been in the market for a few years, or in my case, a few decades. But folks, we will live long enough to see those kinds of dynamics, if not now, at some point in the future, and maybe not necessarily with NVIDIA. But I lived through the late 90s, and it was Cisco Systems that just couldn't go down until it did by 80%. Now, I'm not making a call. Those of you who are watching this, who are in this stock and believe in AI big time, I completely concur. I think we should believe in the productivity that AI brings and the massive investment that's going to be there in the next few years. We're just talking about a market right here and potentially a stock that may be a bit far out over its skis. So just telling you what the charts are telling me right here, but I'll say it again, look what it was telling me right here, as I showed you already. And pretty compelling that this is going to break out below, and it did nothing but scream out above. So nothing in markets works 100% of the time. You just look at probabilities and diversify and protect yourselves accordingly. Thank you so much, as always, for watching and listening, and I'll be back soon. Take care. Bye-bye.